Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. It's been a few weeks since I did a video. Really didn't have anything to say. Going to continue to watch the same charts I've been watching. Hopefully none of this comes as a surprise as far as any of my analysis that you're about to hear. Last week, or 2 weeks ago, I think I said we were in the 5th or 6th inning. I think we're in the bottom of the 6th inning here. Now, the 6th or 9th inning can take a while. Price can get extended. It can bounce up and down as it did in 2016, 2017. That's the ideal situation. That is one path on the if this then that decision tree. Something else that people need to realize is when I'm looking at this stuff, I'm looking for possibilities and execution as that approaches. I don't care if it's right or wrong. So, I'm going to show up head and shoulders at the end of this, and some people are going to say, that's obviously not there. But the moment it breaks down, I'm going to trade it like head and shoulders. So we'll start with the 2-year MA multiplier, one of my favorites, if not maybe my favorite long-term indicator, besides the cloud, obviously. Source, look into bitcoin.com. Really great website, free. You can get the newsletter, email, whatever. But what this shows is the 2-year MA, 730 MA, in the green line here, and then 5 times that in the red. Historically, it's been buy zone, sell zone. We are quickly approaching sell zone. Now, this doesn't mean sell immediately everything as soon as it taps that line. It doesn't even mean the run is over, as was the case in 2017. I mean, we tapped this 3, 4 times, 5 times before we actually broke above. In 2011, it busted up for months. Same thing with 2013, 2012. So it's not over. It just says the probability that this is going to pull back increases exponentially. And that's difficult for people to understand because they want exact numbers. They want to go all in here. They want to go all out there. That's not how this works, folks. How I will be trading this is the moment this turns red, I will begin dollar cost averaging out of my Bitcoin position. Very, very slowly. I'm talking very slowly. You can tell me to have fun staying poor in the comments. That's fine. But I'm just trading this indicator. I am a technical trader. So this could go 2x from the red line. You could look at that. That's something else you could look at. The moving average multiple was over 2x here, and we're talking from the 5x multiplier. So it was 8K-ish, 7-8, and it went to 20. Here it was 243, and it was a 5x from there, 48 to 230. So you can see how far this can keep going, right? Obviously, I want this to go to infinity. I think all of us do. But right now, no major issues as far as that's concerned, where this looks on the MA multiplier. 200-week moving average heat map. So this shows how far we are. It shows percent monthly increases of the 200-week moving average. So if the moving average is going up super quick, that typically indicates price is super hot, obviously. We are in very clearly no longer in the blue zone. So once we get in the red zone, that's the danger zone. So if you group these together, you can say, okay, we're in the red zone here, we're in the red zone here, when that happens, right? And you can make your decisions from there. Puell Multiple, daily coin issuance divided by daily coin issuance over the past year. This is in USD, so it's notional. And historically, again, sell zone, buy zone, we are quickly approaching the sell zone. We're not there yet. So again, we're in the 6th inning, we're in the home stretch here. This could last another 18 months. I don't think it'll last that long, but it could. It could. There's not a lot of data points on here, so it's hard to really say what the average duration is, but I would guess 6 to 18 months from here, we'll know quite certain that a top was put in. Looking at stock to flow, we're actually outperforming stock to flow expectations, which hasn't happened since really 2013. It outperformed, came back, underperformed a little bit, outperformed, was all over the place, and now we're outperforming just slightly. But we're approaching that 85K expectation by May. 85K by May? New hashtag? Maybe? I don't know. I don't think so. Probably not. Here's Bitcoin logarithmic growth curves. Again, treating it as an oscillator, buy zone, sell zone. Now these have picked the exact top 3 times. N of 3, perfect. Okay. So if we are in anywhere near this territory, you know, it's looking like 100K this year, possible. You know, it's either this year or next year, within the next 18 months. I think that's the perfect window for 100K. 100K plus, potentially. You know, I like a lot that we are actually chilling at the median line here of this logarithmic growth curve, kind of similar to August 2017. So again, I think all this stuff looks great. It's obviously bullish. Looks like it's going to have continuation eventually. Doesn't look like it's going to stall here. Historically, it hasn't really stalled here. If it does retrace, it eventually has bubbled out, right, to whatever price. Here's the MVRV. Here's the formula. Again, it was approaching dangerously close to being overbought, but we pulled back a little bit. Now we got a little more steam in the tank. The bigger the pullbacks, the better. Honestly, that's probably the name of this video. The bigger the pullbacks, the better, because that just allows people to get in, allows people who had money on the sidelines to get in, it allows the leverage to get flushed out of the system, and then it all starts over again, like a phoenix rising from the ashes. Here's the UTXOs, and historically, if the oranger, the warmer UTXOs, so these are UTXOs that have moved recently. Historically, if these rise very quickly or get past 15%, so for instance, if the 1 to 3 month range gets past 15%, that has been a top almost every time. And we're currently at 10, we were at 10%, we're at 9% here now. This is hard to read unless you understand it, but once you understand it, it's pretty easy. Blue here is coins that haven't moved in 5 years. So you can see some of these coins maturing into these older categories. Another way to think of this is Bitcoin days destroyed. If people are moving coins around, it's almost always to sell unless it's custody. You don't move coins to an exchange to buy more coins. You move them to the exchange to sell. So when you see an uptick of UTXOs, for me, that indicates people who are holders become sellers. And yeah, there's a lot of excitement and euphoria in the market. That fuels more top things as new people get in, they get wiped out. You know, it's the circle of life. But so far, what I'm seeing on UTXOs is expected with a bullish rally like we've had, but it's not like end of days situation for the rally, which all this is echoing the same thing. 6th inning. Okay, I'm thinking 6th inning, there's 9 innings. Maybe we get a 10th inning if we're lucky, but I think the 6th inning, 6th through 9th inning could last another 18 months. Here's something a little concerning on the weekly. We have the beginnings, the trappings of a, not necessarily a TK disequilibrium, so this will be a TK disequilibrium here. This is the cloud, by the way. We are actually just so far blown out from the average, which is how you read this. So this red line is the 50% fib of something high to low, probably here to here. And if this goes flat, there's a very high probability that price will want to return to that level at some point in time. Now it's the weekly, it's super slow, blah, blah, blah. But if we get some catastrophic decline in price, I'm looking at 23K immediately, because that's where the weekly Kijun is. Sometimes we wick to the exact price, sometimes we wick above it, sometimes we wick below it. But it's always usually within 5%, I'd say, of the Kijun, or exactly. I mean, it's eerie how many times it actually retests this level, because it's a 50% of something, and that's just the market norm. So people are rebuying here, the psychological levels here, it's previous all-time high-ish, you know, whatever you want to think of it as. So we're currently 36% above the Kijun. Now in 2017, we are 42% above the Kijun. It looks pretty similar. You know, I gotta say the daylight we have between the cloud, you know, the worst case, the hardest thing to trade here is if this goes past 10K. I don't think that's gonna happen. I'll show why in a second. But if this goes below 10, 12K, and it's just like in the doldrums down here, and the TK cross recross happens several times on the weekly, that's just a hot mess that nobody wants to trade. So I think that's the least likely scenario. But a pullback to 23K from here, not unreasonable. People will look at that and think I'm crazy. I'm not expecting it, but if it happens, it happens. And I'll be right there with my bids at 23K. Now, if you did that in 2017, you get bulldozed, right, eventually, because this just keeps going. I think the difference between 2017, 42%, and 2021, 36% above the Kijun here, above the average, is that on the previous indicators I showed, the moving average multiple, the logarithmic growth curves, the UTXOs, you know, all that is giving me comfort that this isn't over if we retest 23K, for example, because historically this has room to go higher. Here's how it looks on the daily currently. Sorry, this is 2017, my bad. Here's how it looks on the daily in 2017. You You know, kind of similar to how it looks now. I think I have that chart here. So we're 18% above the Kijun now, and we did eventually get some sort of edge-to-edge move, which is what I'm signaling here. But again, your support. So the first support I'm watching is 29. The next one is 23 if we get some massive catastrophic blowout situation, which is not likely. But a part of the decision tree. So this is only 18%. We sneeze and we go down 18%. Another scenario is we just keep consolidating for like a couple months, and then hopefully we come out of Q1 into the promised land into Q2. If not, and we consolidate down. Again, this is part of the if this then that decision tree. This isn't up or down. This is if we break above this, great. If we don't, we're going to 26 guaranteed, just as we did in 2018. Edge-to-edge trade. I mean, this is all just this stuff I talk about all the time, but to map this out ahead of time makes it so much easier to actually trade when it happens because you're expecting a move, you know, where to put your bids, where to put your asks, that sort of thing. So right now, I don't really think there's a major trade here. Here's 2017, 2018, how that happened. You can see we consolidated, we bounced above the Kijun, then we got our bearish TK cross below cloud, blah, blah, blah. So all this is just setting up for, you know, what's going to happen over the next 3 months. That's all I care about, because right now there isn't a lot of trades for me on, there aren't a lot of trades for me on BTC. Here's the 4 hour, and it's reasonable to watch the 4 hour for entries. It's been a mega mess, and again, I'm seeing head and shoulders fractals over and over again. I can't not. I don't have a bearish lens on. I just shoulder, head, shoulder, shoulder, head, shoulder, shoulder, head, shoulder, neckline, neckline. I mean, it's all the same thing when you compare it to the cloud, because if we break below the cloud, then it's short city, right? Volume's arguably descending, not perfect. Hurts the head and shoulders case. If we're able to go not sideways here, the cloud looks okay size-wise. There's no concern for a massive pullback. Like the short isn't juicy here, but if we're able to survive this consolidation, even a 4 hour TK cross recross here would be good enough for me for a re-entry as far as a long leverage position. But right now, this is just a hot mess. Last two charts here on the pitchfork. Again, we're far away from the 200, we're far away from the median line, but not that far away. We're far away from the yearly pivot, not that far away. You know, anything above 22 to 28, I think is going to be a gift long term. If that happens, it's going to take some time for this 200-day moving average to move up to price. But it's going to be super interesting when there's all this confluence for a dip buy at somewhere around 28, whatever that daily Kijun is, right? Where was it? Daily Kijun is at 29. That's not going to change anytime soon. So that's there for the indefinite future. The median line on the pitchfork is going to be between 28 and 29 by the time we know what's going on with the move. The 200-day moving average is going to move up there as well. So for me, that's like max downside leading into the 29th, which is a big futures and options expiry date. So there's a bunch of volatility that is connected with that. But, you know, I like the R5 by the end of the year or sometime between now and 18 months, which is 100K. I like the top of this pitchfork sometime between now and 18 months, which is 100K. You know, all this stuff looks good for continuation by far. But here's the most concerning thing. You know, once we get through these humps, I think everything's going to be fine. But this is pointing to the weekly Kijun case where we're talking 22, 23. I don't know if we have enough bearish momentum in the market. It really doesn't seem like that because the dips just get bought up ferociously. But we can't just put our head in the hole and hope it doesn't go down, right? This is the map I'll be watching if it does occur. So that's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.